All right. Doing a short little update today. Number of data points out. So we got the Fed's official balance sheet update. We got the jobless claims. Talk about those really quick. So this was actually the first time since February 2020. Seems like a very long time ago that the Fed's official balance sheet actually fell. So the Fed's official balance sheet, when it was released from the official Wednesday, June 10th numbers, was 7.168 trillion. It fell, according to George Goncalves, about $74 billion. He put out a tweet. Remember, when I interviewed him in the last month or two, he puts out a really nice summary on his Twitter that's only about one or two tweets updating the Fed's balance sheet. So if you want to follow him at Bond Strategist, he puts out a really good update. So this week, the balance sheet shrunk $74 billion approximately, the largest reduction since May 2009 when it declined by $100 billion. And then he's talking about how the currency swap lines, the dollar swap lines, temporarily went down. However, the US Treasury still has to issue trillions and trillions and trillions, $3 trillion this quarter. So we'll see what happens with that. I imagine this is probably just a blip. The Fed's balance sheet had really not gone down officially since a tiny amount in January 2020 and a tiny amount in February 2020, nowhere near these amounts. So continuing on, also wanted to talk about the US Treasury's general account. I asked George Gammon to take a look at it in the last couple weeks to see if it had changed, and boy, had it changed. He put out a really good video last night about that. It has gone parabolic. So I thought it was high, and George thought it was high at $400 billion. And now here we are. The U.S. Treasury's general account is at $1.6 trillion. Freaking nuts. President Trump and Steve Mnuchin can basically do their own version of quantitative easing if they want to juice the stock market or come up with some type of stimulus check plan or some type of plan to figure out how to buy votes for the November 2020 election. Welcome to dystopia. The U.S. Treasury General Account, George showed it in his excellent video, had never really been used like this prior to President Trump entering the White House. It's just so insane. Okay, so I gave you the brief Fed balance sheet update. Again, I think the real fireworks are off balance sheet on the special purpose vehicles that Danielle DiMartino Booth and Jim Bianco of Bianco Research has talked about. All the major fireworks are all off balance sheet. For about 2 months, the Fed never actually bought very much. They just issued a bunch of press releases. They did a tiny amount of buying. They might actually start buying things. Well, they did start buying things, I think, the first or second week of May. So they're starting to ramp up their purchases now. But they got away with essentially just manipulation by press release for a while, and that calmed the markets down and allowed the U.S. Corporations, these large publicly traded corporations, many of whom have a cash flow problem and big balance sheet problems with too much debt on the balance sheet long before the global pandemic, they issued even more debt, a record amount of corporate debt in just the last couple months, well over $1 trillion. So let's move on to the jobless claims. Wolf Richter of wolfstreet.com, he puts out a lot of great articles. Hopefully maybe I can get him on for an interview in the near future. I've reached out to him maybe twice in the last 6 months and haven't heard back. But he does have a really good YouTube channel with some good short podcasts, and his articles are excellent. He put out an article today that week 13 of the U.S. labor market collapse. Before, let me just say that according to the base CNBC article from Jeff Cox, this was the 13th straight week that jobless claims have totaled above 1 million. Now over to the Wolf Richter article, 29.2 million people still claim unemployment insurance. The gig economy, which is technology workers, make up a third of that total. So the technology companies are not doing that well. Well, Google's still making profits, but they are firing people, I guess. Some states still not processing claims under federal programs, reasonable approximation for unemployment rate. You can see the chart there on the screen that he put out. Courtesy, it looks like, of the Department of Labor. So it's still a massive amount of people. It's down a little bit, almost 30 million total Americans for continuing claims. So these are people that it wasn't their first time filing unemployment, and they've been continually filing now for weeks or if not months. But you have a situation now where a lot of these payroll protection program, these SBA loans, the PPP loans, those are going to be ending soon. So the grants, the reason to keep the employees on the payroll, so the small business owner or supposed small business owner, considering the fraud that's been in the SBA loans and the PPP loans. There were some firms I've been reading about the fraud, and it's not up to the Social Security fraud and Medicare and Medicaid fraud yet, but there's been some firms that they got double loans, and there was a lot of small business owners that should have gotten a loan and didn't get a loan. It's just a mess. There was hedge fund managers, remember, that were applying for this too. Probably some of those idiots that were doing the risk parity or the basis trade that didn't get a bailout like some of the larger hedge funds. So the unemployment crisis, by far the worst since this type of data has been tracked, stopped getting worse in May and is lessened for the third week in a row, but lessened at a snail's pace, and it's still so enormous that the improvements are relatively tiny under all state and federal unemployment insurance programs combined, including the Federal Pandemic Unemployment Insurance, PUA, that is not pickup artist, for gig workers. A total of 29.2 million people not seasonally adjusted are still claiming unemployment insurance, as the Department of Labor reported this morning. This is down from 29.5 million last week and from 30.2 million the week before. But the overhang, like I said, is what's going to happen to those workers whose the small business that they're working for, those grants are, the loans that are basically grants are expiring, and the owner of the business is going to have to decide if they want to try to restart the business or they're just going to end things and fire the employees. So, and as of right now, I think Larry Kudlow has said that they're not going to extend either the PPP loans, the SBA loans. They're not going to extend them any further yet, but they may. That as of right now, they're not going to. And I think the same thing for the $600 more per week in unemployment. They want people to get back to work, and I don't blame them. People should not be paid more money, more currency per week to not work. $600 more in currency per week to not work. It's going to make the economy even worse than it was before the global pandemic. This is down from 29.5 million last week, 30.2 million the week before. Chart below shows, okay, the chart you can see there on your screen. In blue, the number of people receiving unemployment benefits under state programs, and in red, the number of people receiving federal benefits, mostly gig workers. A few weeks ago, he switched to reporting only not seasonally adjusted data for unemployment claims because the seasonal adjustments were not designed for a crisis of this magnitude, and the results went haywire. In addition, the Labor Department revises seasonally adjusted data often heavily the following week, and dealing with them is like trying to nail Jell-O to the wall. I guess it's good for a little bit of humor, to interject a little bit of humor here. Not seasonally adjusted data are not revised and present a more accurate picture. Still a flood of initial state unemployment claims. The flood of initial unemployment claims under state programs continues. 1.4 million initial claims not seasonally adjusted were processed in the week ended June 13th, down from 1.54 million a week ago. The CNBC article, the first-time claims for unemployment insurance totaled 1.5 million last week, well above the 1.3 million projected by a lot of economists and experts. So there was a little bit more people who filed for jobless claims than was expected. Okay, back to the Richter article. I'm jumping around here a little bit just to show you comparing data points. Flood of initial unemployment claims under state programs continues, 1.43 million. Okay, I already read that. Process in week ended June 13th, down from, down a whole bunch from the tsunami in late March. This is still more than double the records of the prior unemployment crises in 1982 and 2009. There's another chart in the article. It'll be below the video in the information and description section. It'll be linked there if you want to take a look later. In other words, people who qualify for state unemployment benefits, regular numbers, as opposed to gig workers, are still getting laid off in very large numbers. There are bits and pieces of evidence emerging that a larger portion of those layoffs are now from companies that were not part of the initial shutdowns of restaurants, bars, retailers, hotels, and other businesses, but from higher paying jobs across industries. Number of people who continue to claim unemployment benefits a week or more after their initial claim under state programs become part of the insured unemployed. This number of people with continued claims under state programs declined to 18.65 million in the current week from 18.92 million in the prior week, the blue segments of the column in the first chart. In other words, more people got hired back or found another job, including at retailers, restaurants, dental practices, etc., that have reopened than were added to the state unemployment rolls. Federal programs or gig workers are a third of insured unemployed. Pandemic unemployment assistance. Gig workers are now covered under the federal PUA program, again, not pickup artist, which is administered I have to put a little humor in here, which is administered by state unemployment offices. In total, 760,526 initial PUA claims were processed in the week ending June 13th, and 9.28 million gig workers received PUA benefits, down from 9.73 million in the prior week. In other words, here too, more gig workers started working again, and their number was larger than the number of gig workers who lost their work and filed unemployment claims. These out-of-work gig workers account for about 1/3 of all insured unemployed. The PUA claims system now demonstrates for the first time just how exposed gig workers are and how many of them lose their work in a crisis. Pandemic emergency unemployment compensation. Continued claims under the federal PEUC program more than doubled during the week to 1.08 million. Other federal programs include those that cover laid-off federal employees. 15,514 continued claims. Okay, those are small numbers. I'll skip those. You can take a look in the article. Some states still behind in processing claims. The PUA program for gig workers was difficult to implement for states. Some scrambled to get it done. Others still haven't gotten it done. But every week, more states start processing these claims. As of today's report, 6 states still have not processed any claims by gig workers under the PUA program, including Florida. I need a water break there. Also, Arkansas, Georgia, New Hampshire, Oregon, and West Virginia. And 16 states have not yet processed any claims under the federal PEUC program, including Florida again. Apparently, Florida is really far behind. As these states eventually figure out how to do it and catch up, they will trigger additional claims under the PUA and PEUC programs. There continue to be reports that some states are still having trouble catching up with the tsunami of state unemployment claims. I've seen a lot of people post on Twitter that it was Florida. So apparently, it's well known now that the problems are Florida. I guess people are reading off Twitter, and the data is starting to show that Florida is way far behind. That many laid-off workers were still not able to file their UI claim. What does this all mean? Wolf Richter wrapping it up here, I guess. Not fairly sure that the unemployment crisis bottomed out in May. A large number of people still losing their jobs, and now an increasing number of those lost jobs are higher-paying jobs, but other people are finding new jobs or are being called back. And the people who start working again in a particular week now outnumber the people who lost their jobs in that week. Beyond the official data chaos, over 30 million people lost their jobs and remain unemployed. The 2 U.S. agencies that are reporting unemployment data every Thursday, the U.S. Department of Labor, with its claims for unemployment insurance at the beginning of every month, and at the beginning of every month also, the Bureau of Labor Statistics with its survey-based jobs report, disagree widely. So one government agency's data is totally different than another. They disagree widely. So the U.S. Department of Labor with its claims for unemployment insurance disagrees widely with the Bureau of Labor Statistics with its survey-based jobs report on the unemployment numbers. A difference between these two agencies of about 9 million unemployed, as Wolf Richter pointed out in another article last week. The Bureau of Labor Statistics has gone off the deep end for systematic reasons and officially admits to at least part of its errors. So our most accurate stab at the unemployment situation in the U.S. is the Labor Department's unemployment insurance data. The 29.2 million people still claiming unemployment insurance under all programs, but states are still behind processing claims, and some people who lost their work don't qualify for benefits. So if you add it all up, it's still reasonable to say that over 30 million people lost their jobs and still unemployed and want to work, because the official numbers are at 29.2, and it's probably a lot higher than that. Finally here, reasonable approximation for the unemployment rate, 20%. The unemployment rate is in the eye of the beholder. Both agencies report various unemployment rates, and they're all over the place. In early June, the Bureau of Labor Statistics reported that the unemployment rate dropped to 13.3%, but there is a way to approximate it. 29.2 million people claim unemployment insurance in a labor force of 158.3 million for a rate of 18.4%. Add the people who lost their jobs but don't qualify for unemployment insurance, and add the people who never worked or who haven't worked recently but want to work and cannot find a job, such as recent graduates, and suddenly the unemployment rate is well above 20%, in his opinion. And the term an unemployment rate of above 20% seems like a reasonable approximation of the current conditions of the labor market. Let me just hit the refresh button and see if John Williams of Shadow Stats has something quick that I can read. Let's see here. June 19th update. June 17th to 19th. May 2020 headline unemployment dropped to 13.4% from 14.7% in April, while May payrolls jumped by 2.5 million versus a negatively revised April plunge. I don't see a lot here. I'm just skimming it though. If you wanna take a closer look at that, it'll be below the video in the information and description section. Bottom line is, things are still pretty bad. They're going to try to reopen the economy. We'll see what happens. If you believe what's coming out of the news, there's big spikes again in California, big spikes in Texas, and I think big spikes in Florida and Arizona. I think hospital beds in Arizona are getting pretty full. The last thing I saw in the last couple days. Okay, super chat from Dimitri, who is also a Patreon account contributor. Remember, we have over 200 people listening to this live stream show and only a couple dozen likes, so please tap or smash the like button. Hi Jason, what do you make of huge amount of open interest on VIX? Very out of the money call, $100 for late July, November, September, but not October or early July. I'd have to look at it more. I saw you sent me a Patreon message. I actually have like hundreds of Patreon messages. Some of them are over 5 pages long, and a lot of them are about junior mining stocks that have very little cash and have no cash flow. Well, they might have some cash, but I'd have to look at that more, Dimitri. I will look at a chart. Since you pay $20 for super chat, I will pull up the VIX chart. Let's take a look at the 1 month chart. The 1 month VIX chart is back up again, and it's starting to make higher lows. So it's starting to creep back since it broke out again, looks like after June 10th. And then it's been knocked back down a little bit in the last few days. But it's starting to make higher lows. So it is creeping higher. So I think some people are buying out of the money calls to hedge. The stock market, the Dow is back above 26,000 though. It's nuts. And the Nasdaq, is the Nasdaq at all-time highs? I haven't looked at it in a few days. Gold's in a trading range. They're keeping gold quiet for now. I'd have to research the VIX more. I'd have to look at the open interest. There's some options websites that I do monitor in the past. I used to look at, if anyone wants to, I'm not sure if they still have the website going, Options Insider. I think Options Insider. I know my friend Christopher Irons at QTR, he has one of his sponsors, I think one of his podcast sponsors tracks option movements, but I think they charge. It's like the Sal Lucci Steam Room or something. I think that might be it. They track options movements like that, so he might have more of a write-up. Again, I haven't looked at the VIX that much, so I can't really comment on that. I did have some technical analysis chart work on the VIX, showing the trading range a month, 6 weeks ago, maybe? A month or 6 weeks ago. Okay, part 2 of your super chat, thank you. Maybe part 2, what? In October, early July. Oh, part 2, you mean like a second wave? Okay, so the black swans, Dimitri, the black swans from a fundamental standpoint for the economy would be small business owners here in the U.S. firing more employees because the PPP loans are not renewed. So more Americans would, a big spike in unemployment rate might start to actually matter to the stock market if the PPP loans don't work. Although with the US Treasury general account where it is, Trump and Mnuchin have a lot of ammunition to do a lot of financial engineering. They could go at 2 or 3 a.m. and they could buy a bunch of S&P 500 E-mini futures, which it sounds like someone has already been doing. Keith McCullough was tweeting. He tweets about that all the time, actually, of Hedgeye. Keith McCullough of Hedgeye. So there's already like futures contract and options manipulation there with the S&P 500. Other black swans to me are commercial real estate. So I think unless cash flows come back, commercial real estate's in big trouble. They don't have a lot of bailouts yet for commercial real estate, and it is a really big problem. And then the other one is the amount of debt these large corporations have. And also, I think the banks. So like the stuff that George Gammon has said about the banks, quoting Lynn Alden, have the banks have, what, 1.7 trillion in reserves? You do not lower the bank's reserve ratios down to 0 if the banks are in good shape. If you study Austrian school economics and you study their problems with fractional reserve lending, you don't take all the banks' reserve ratios, like the reserve requirement ratio and some of the other ratios that the banks have, you don't take them down to 0 if the banks are in good shape. So I think they're anticipating that there's going to be a lot of defaults, a lot of problems in commercial real estate, and also with the large corporations that the banks have loans out to. Stephanie Pomboy was interviewed. It was either Hedgeye with Keith McCullough recently. I don't know if they posted it on their YouTube channel. They were advertising it on Twitter. And she has a long presentation about all this debt that the large corporations raised recently and how the amount due in the next 12 months is, I think, over $1 trillion. So that is a lot that will have to be rolled over. A lot. I don't think that they can make the payments right now because a lot of these large corporations just haven't gotten their cash flow back. They keep telling, we're going to find out, we don't have the Q2 earnings yet. It's still too early. We're going to find out. I think the Q2 numbers are going to be even worse than the Q1 for a lot of these companies. I think now obviously the stock market is not pricing that in right now, but I think the earnings for the actual companies, for a lot of them, are going to be worse than even for Q2 are going to be worse than even Q1. Okay, I have, let's see here, one more super chat. Thank you, Daniel Ashley. I appreciate it. Don't options expire tomorrow? I think certain options expire tomorrow. I'm not sure if it's precious metals or not. I don't follow a lot of those options. I don't do a bunch of day trading, so it doesn't affect me that much. I'd have to look that up. I haven't seen if the options. If you're day trading, look, if you're gonna day trade or do short-term swing trading, you have to know when the options expire. If you're a long-term investor, unless you're planning on accumulating, in my opinion, unless you're planning on accumulating, adding more to positions or starting positions, you really don't need to know all these options details when options expire. If you're short-term or medium-term, if you are a short-term or medium-term trader, then you do. So I don't do a lot of short-term trading, so I don't need to know a lot of that stuff. I don't need to pay attention to all the little details of options expire. Although normally with precious metals, when precious metals markets, when options do expire, that means the price is going to get smashed. Commercial, we haven't had a bunch of bankruptcies in commercial real estate yet. I think we had Tom Barrack's Colony Capital. We haven't had massive ones yet. It's coming, though, unless cash flows come back, unless they figure out a way to change the rules. But there's also problems. I highlighted this in the last live stream show. There's problems in the residential real estate, too. The problem with real estate that most people don't understand, unless you're a real estate investor, is the amount of debt that these real estate investors use to finance the property. So even if you're putting down a 20% down payment, you're still using a massive amount of debt. Okay, super chat from Daniel was only asking if someone was asking about VIX futures. Well, the VIX is making higher lows, so people are starting to get worried about a number of the different things I talked about, with how the PPP loans the grants are starting to expire, and the small business owners may fire more people, and then that's going to spike unemployment again. Look, if the economy does not restart and there's not somewhat normal cash flows prior to the global pandemic, a couple months from now, we're going to start to see a lot more volatility, in my opinion. Now, here's the thing about volatility. People are going to I'm going to go buy the VIX. The Fed is there's a ton of people with the leverage short volatility trade that want to smash the VIX. So anytime it spikes, there's people that are going to go bankrupt if it goes up too high. So they will keep doubling and tripling down. Also, the Fed has said publicly, Jerome Powell has said it, and other Fed members, that their goal is to reduce volatility in these markets. And by that, one of the things is the move. Jim Bianco Research talked about that. I played a clip of that, I think, last week about the MOVE index, which is for bonds. That's the VIX equivalent. The VIX is for stocks and the MOVE is for bonds. So the MOVE index is almost like there was never any problems in February or March for the last few months. So the Fed has calmed the bond markets down a lot. Okay, well, I think that's it for this short little show. I want to thank everyone for listening to this. Oh, excuse me. Actually, there was one more tweet. Let's see here. This was a Bloomberg reporter. The May jobs optimism is not confirmed in the latest U.S. initial and continuing jobless claims data, from Lisa Abramowitz from Bloomberg. And then Wolf Richter also has more analysis on the retail sales numbers that came out earlier this week, where everyone was saying how great they were, and they're not really as good. So I'll also put a link to that below the information and description section. So I think the Fed's official balance sheet, I think it's an aberration. I do not expect the Fed's official balance sheet to keep falling. That would be pretty shocking considering how much debt the US Treasury needs to sell going forward, and how foreigners are not buying US Treasuries. So foreigners are not going to buy US Treasuries, and the US Treasury needs to sell more Treasuries. Who's going to buy them then? Probably just the Fed. Well, or it's going to be like Wall Street hedge funds who need collateral, or it's going to be primary dealers, the primary dealer banks, or it's going to be Wall Street traders that buy these Treasuries or other bonds and then flip them to the Fed, because they're all these bond traders now. People talk about bond vigilantes. Most people in the bond market don't think that long term. Most of those guys are just all about trying to front run the Fed or the ECB so they can flip the bonds, either government bonds or corporate bonds, to the central bank for a quick profit, because they know that the central banks are going to buy this garbage up. Okay, well, I think I wrapped that up. Thank you, everyone, for listening. Thank you very much to my over 1,000 Patreon account contributors. It is only $5 a month. You can take a look behind the paywall. There are a lot of good articles on there. In the last couple weeks, there was gold mining articles on Barrick Gold, on Newmont Mining. There's a lot of research there about the royalty and streaming companies, about how the business model actually works, about how you get exposure to junior mining companies. You get actually a bunch of call options that do not expire. I explain my reasoning for that in a bunch of different articles. There's at least 3 or 4 different articles in the last 6 weeks about that. And there's also a really lengthy piece about the derivatives and euro dollar market that I just released. There's a shorter audio podcast version. If you don't want to read like a 20-page article, there's like a 15-minute audio podcast that summarizes things. And there's a really long article in the last couple months about the risks to uranium investing, to having too much exposure to uranium. Hopefully in the next couple weeks, I will also have out another oil market update, maybe an oil tanker article update as well. And then a uranium cheat sheet article. That one of those may be at a higher price point though per month. We'll see. I'll think about it. Okay, everyone. Thank you very much to my Patreon account contributors, my monthly PayPal contributors, and people who tip me in crypto once in a while. I also take donations in crypto, the top 6.